What if I told you that you could turn just $100 into $1,000 using AI trading bots, and do it in a matter of weeks? Sounds too good to be true, right? But with the right approach, smart strategies, and a bit of discipline, it's entirely possible. In this video, I'll walk you through a step-by-step plan to leverage AI trading bots to multiply your capital by tenfold. Stick around until the end, because I'll share the single most important tip that can make or break your results. Welcome to TechMoneyAI, where we explore cutting-edge AI tools to help you invest smarter. If you haven't already, hit that subscribe button and turn on notifications so you never miss an update. Visit us at www.techmoneyai.com for deeper guides and live performance dashboards. Remember, invest better with the power of AI. 1. Choosing your initial bot and strategy. Your first decision is selecting an AI trading bot that aligns with your goals and budget. With $100 to start, you need a platform offering low minimums and low fees. Popular options include tradesanta for its simplicity, cryptohopper for flexibility, and 3 commas for advanced strategies. For beginners, I recommend starting with tradesanta or Pionex's free bots. Once you've signed up, connect your account to a reputable exchange like Binance or Coinbase Pro. Choose a conservative strategy such as grid trading or dollar cost averaging, DCA. These approaches work well in sideways markets and limit risk. 2. Budget allocation and risk management. With only $100, every dollar counts. Allocate no more than 5%-10% of your capital to any single bot strategy. That means setting your initial trading size to $10 per position. This conservative approach protects you from large drawdowns. In parallel, define clear stop-loss levels, ideally 2%-3% per trade, to cap potential losses. Enabling automated stop-loss rules on your bot ensures emotion doesn't creep into your decisions. 3. Setting up your grid trading bot. Grid trading is ideal for small portfolios. It places buy and sell orders at evenly spaced price intervals, profiting from market fluctuations. On your chosen bot platform, configure a grid between a lower price, for buys, and a higher price, for sells. For example, if Bitcoin is trading at $30,000, you might set a grid range from $29,000 to $31,000 with 10 to 20 grid levels. With $100, you could allocate $50 to this grid. The bot will buy small amounts as price dips and sell small amounts as it rises, generating consistent gains. 4. Using dollar cost averaging, DCA, for stability. Complement your grid strategy with a DCA bot on the same platform. DCA automatically invests a fixed amount at regular intervals, smoothing out volatility. Allocate the remaining $50 to buy $5 worth of your chosen asset every day or every week. Over time, DCA reduces the impact of market swings and builds a larger position. When combined with grid trading, DCA ensures you keep accumulating assets while the grid captures short-term profits. 5. Leveraging arbitrage opportunities. If your bot supports arbitrage, that's another low-risk way to boost returns. Arbitrage bots detect price differences for the same asset across multiple exchanges and execute simultaneous buy and sell orders. To try this, connect 2 exchanges to your arbitrage bot, say Binance and Kraken, and allocate a small portion, maybe $20, just to test. The bot will automatically exploit spreads, pocketing small profits that add up over time. Although spreads can be tight, consistent arbitrage can contribute 1%-2% weekly returns without directional market risk. 6. Monitoring performance and adjusting parameters. Don't set your bot and forget it entirely. Check performance daily or weekly. Look at key metrics: win rate, average profit per trade, and maximum drawdown. If your grid bot is underperforming because the market has moved outside your price range, adjust the grid boundaries. If DCA is buying at consistently high prices during an uptrend, consider shifting the interval or pausing until volatility subsides. Continuous fine-tuning ensures your bots stay aligned with current market conditions. 7. Scaling up as profits grow. As your $100 evolves to $200, $300, and beyond, keep reinvesting profits back into your bots. Compound growth is the name of the game. At each milestone, for instance, every $100 gained, reassess your allocation. You might increase your grid size, add another arbitrage pair, or experiment with a new strategy like trend following. Always maintain risk limits. Never deploy more than 50% of your total capital in any single bot setup, preserving liquidity and minimizing overexposure. 8. Diversifying across assets. While Bitcoin and Ethereum are the most common, consider diversifying into altcoins with high liquidity. Many bots support a range of assets: Binance Coin, BNB, Cardano, ADA, or even DeFi tokens. Allocate small slices, 5%, 10% of your portfolio, to each new asset. Diversification spreads risk, so a crash in one asset doesn't wipe out your gains from another. 9. Automating profit withdrawals. One key to successful compounding is pulling out profits. Set your bot to automatically transfer 20% of weekly profits back to your main wallet. This practice locks in gains before a market reversal. For example, if you earn $20 in a week, withdraw $4 as realized profit and leave $16 to compound. Over months, these withdrawals accumulate, ensuring you're not left with only on-paper gains. 10. Learning from real-world case studies. Let's look at a real example. Jane started with $100 on cryptohopper in January. She split her capital evenly between grid trading and DCA, reinvested 80% of profits, and withdrew 20%. By June, her portfolio had grown to $900. She then added an arbitrage strategy, pushing her total to $1,200 by September. Jane credits disciplined withdrawals, regular parameter tweaks, and sticking to her risk limits for her success. 11. Avoiding common pitfalls. Beware of over-leveraging. Margin and futures bots can amplify gains but also losses. Until you're comfortable with your bot's performance, steer clear of high-leverage strategies. Also, watch out for platform outages and API key safety. Use read-only keys where possible and enable two-factor authentication on all exchange accounts. 12. Staying educated and adapting. Markets evolve, and so should your strategies. Follow industry news on www.techmoneyai.com. AI trading is a rapidly advancing field. Lifelong learning is your competitive edge. Conclusion. Turning $100 into $1,000 with AI trading bots is ambitious but achievable with the right approach. Choose the right bots, diversify strategies, manage risk, and compound your gains. Maintain discipline, automate withdrawals, and continually optimize your settings as markets change. Remember to start small, experiment responsibly, and never invest more than you can afford to lose. If you enjoyed this step-by-step guide, make sure to subscribe to TechMoneyAI and hit the notification bell so you never miss our latest AI investing insights. Visit www.techmoneyai.com for detailed tutorials, live performance dashboards, and advanced strategies. Until next time, invest better with the power of AI.